Hello traders, today we are analyzing the market through the powerful lens of Elliott wave theory because the structure suggests we are completing a significant wave 4 correction. This corrective phase has been complex and drawn out, but the textbook targets for the start of the impulsive wave 5 are now in sight, which promises a massive rally. When we overlay the Ichimoku cloud on the 3-day chart, we see the price resting comfortably above the Kumo cloud, which is a strong foundational bullish signal that cannot be ignored by serious investors. The conversion line Tenkan-sen has clearly crossed above the baseline Kijun-sen, which is known as a bullish crossover B signal within the Ichimoku system, confirming the underlying strength. The lagging span Chikou span is also sitting well above the crit price action, confirming the overall long-term uptrend dominance. Furthermore, we are deeply analyzing the unprecedented growth rate of the entire stablecoin market capitalization, which has surged to all-time highs. This huge reservoir of dry powder represents incredible buying power that will surely enter Bitcoin once the market confirms the start of the impulsive wave 5. If we look at the Gann-Fan analysis extrapolated from the previous cycle low, the crit price is interacting precisely with the critical 45-degree angle. This specific interaction suggests that the crit movement is perfectly aligned with established time and price cycles, indicating the end of the consolidation phase is imminent. The trading volume has been declining consistently throughout this entire wave 4 correction, which is perfectly healthy and typical of a non-impulsive corrective move. We must be watching the previous cycle high level because a confirmed weekly candle close above this key resistance zone will definitively validate our current Elliott wave count. This breakout will confirm the start of the parabolic acceleration phase that all crypto traders are anticipating. Do not let the short-term market noise and the low volatility distract you from this massive long-term structure that is clearly defined by these advanced technical tools. This moment demands calculated risk-taking and not emotional trading based on fear or greed. The key is patience while waiting for the final confirmation of the Wave 5 launch. Wuhoff accumulation schematic, because the chart structure aligns perfectly with the classic Phase C spring event. This shock deviation below the trading range boundary likely served to grab liquidity and trap late bears before the real move up. The subsequent rapid move back into the range is a powerful sign of strength, suggesting that smart money has completed its accumulation. When we analyze the volume profile visible range VPVR, we can clearly identify the high volume node or point of control POC, which is currently acting as a major traction level for the price. The unbalanced volume OBV indicator is painting a picture of massive hidden strength because it has been making consistently higher highs while the price has been consolidating. This bullish divergence in volume suggests significant underlying demand is entering the market unnoticed by most retail traders. Shifting to on-chain metrics, the Bitcoin hash rate remains exceptionally robust near its all-time high, confirming the network's health and security. However, we must monitor the slight increases in miner selling volume, which indicates that some older coins are being distributed to cover operational costs or take profits. This selling pressure has been easily observed by current demand, preventing any major price collapse. Regarding stablecoins, we are watching Tether's market share against other fiat-backed assets like USDC. A shift from minor stablecoins back into USDT often precedes major market volatility as traders centralize their reserves. Currently, the flow is stable, showing confidence in the overall market structure. Our key level to watch is the last point of supply LPS, and a decisive breakthrough above that level will officially signal the transition into Wuhoff phase E, which is the markup phase. This final phase is characterized by a rapid price increase and parabolic movement, so prepare your trading plans accordingly. Do not mistake this final consolidation as weakness. It is merely the market completing its sophisticated cycle of transferring coins from weak hands to strong hands. The current prolonged consolidation phase is aligning precisely with a dense cluster of Fibonacci time extensions, suggesting that the market is nearing a critical inflection point in its temporal structure. We are projecting a massive volatility expansion just as we exit this specific time window. Shifting focus to the derivatives market, we observe a healthy futures premium, which indicates that the market is firmly in contango. This positive basis is a powerful signal of strong institutional demand and a willingness to pay a premium for future long exposure, a clear bullish sign. Furthermore, the 75 delta risk reversal skew in the options market heavily favors calls over puts across all major expiration dates. This deep out-of-the-money call bias reinforces the conviction that institutional players expect a significant upward movement in the medium term. On the on-chain side, the UTXO realized price distribution (URPD) highlights a massive volume of coins that were transacted at the current price levels. This heavy concentration of coins effectively creates an immovable realized support floor beneath the market, which is unlikely to break easily. The quantity of stablecoins, specifically USDT supply on exchanges, has been decreasing dramatically in the last week. This means that a large amount of capital is being taken off the trading books, which often precedes risk-on action as traders move funds to wallets or decentralized finance platforms to lock in positions. The Fibonacci channel drawn from the previous cycle bottom provides us with an upper target resistance line that aligns perfectly with our futures market projections. This confluence of time cycles, futures premium, and on-chain support suggests that the path of least resistance is unequivocally to the upside. Maintain your core long positions and focus on adding small amounts on dips near the URPD support zone. Volatility indicators, specifically the Keltner channels and the average true range ATR. The Keltner channels are incredibly tight right now, squeezing the price into a narrow range, which is a classic precursor to a violent expansion of movement as the market reverts to its mean. The current ATR reading is at a multi-month low, confirming that we are in a state of extreme compression and should anticipate a daily candle with a range far exceeding the recent average. On the on-chain side, we are looking closely at the net unrealized profitless in UPL metric, which is sitting comfortably within the belief zone. This reading confirms that the market is profitable and healthy without reaching the overheated euphoria stage that usually marks a cycle top. This sustained belief suggests strong hands are holding and waiting for higher prices. We also noticed temporary spikes in whale deposit volumes to centralized exchanges, which were almost immediately reversed by even larger withdrawals. This pattern suggests that whales were testing liquidity or attempting a psychological move rather than preparing to sell off their major holdings. In the derivatives market, we see a distinct funding rate divergence, where the perpetual swap rate is slightly negative while the quarterly futures basis remains moderately positive. This setup is a potent volatility signal, often triggering a rapid move to restore market equilibrium. Regarding stablecoins, the total USDT balance held on exchanges has dropped to multi-year lows, suggesting that institutional and large retail capital is not waiting on the sidelines in cash. They are either actively deployed in crypto or stored securely off exchange, which is a strong risk-on signal. When the price inevitably breaks out of the Keltner channel boundaries, we should expect a rapid and sustained move in that direction, so set your alerts and manage your risk carefully.